to the cloud. It's going to be some awesome information, some great nuggets from Mel as she kind of takes us through some investing, some duplex conversion stuff. I know that she's even dabbling into some 4-unit stuff that she was speaking about to me last week, which is cool. But before we do that, do we still have Greg? Are you still on here? Did you? Oh, he's not on here. Well, I'm going to pass the baton to Micah on this one. So as we all know, this morning, rates went down a quarter point, but I've seen literally a million posts on social media, and about 0.1% of people are actually putting some context behind what they're posting. They're just screenshot, rate cut, awesome. What does that mean? If I'm a consumer, no, absolutely nothing. Or even if I do know something, what does that actually mean from a rate cut perspective, from affordability, what that could possibly do to the market? Micah, if you want to share, I know you said that you just shot a video. So if you kind of want to share your perspective on it, that'd be great, because we need some context to take your clients, because people are going to be asking about it, right?
I think my opinion is going to be similar to all of us. Like on this call, I mean, for the most part, to your point, most are just putting content out there that doesn't actually have any perspective as to like how it has effect. I actually don't think it has any effect. The buying power doesn't really change all that much. Most people are going to a fixed rate anyways, which is a percent below what our overnight rate is. So I don't think it changes anything. I think what it does, and Mel agrees with me, is it changes the mindset and the consumer confidence, which is going in the right direction. So will it change what buyers conceive was going to happen in the next 2-3 quarters? Absolutely. Will it change their actual buying power with regards to how much they will be able to afford? Not really. Like, what do we work it out? It's like $60. Like, it's not going to change that much, but it certainly changes the mindset. I do think that you'll probably see potentially 2, if not 3 more rate cuts for the next 6 to 8 months or for the remainder of the year, which I was reading a Vanguard article this morning, and that was exactly what their chief economist predicted, which would be based on GDP, and then obviously based upon some of our growth stats. So yeah, I actually don't think it's going to change that much, but it would certainly will get people talking. It certainly will keep the consumer, or will increase consumer confidence, and I think you will start to see buyers getting a little bit more active because they believe it's going in the right direction.
Yeah, 100% agree with that. Hopefully, it's some momentum in the downward direction, but upward for the real estate market. But yeah, from a cost buying affordability perspective, it certainly doesn't change a lot.
Well,
But it's
I
good, man.
hope it doesn't actually change prices, to be honest. Like if we do see a little bit of a spike in interest for buying, I actually hope it doesn't increase the prices all that much and throw things into a frenzy, because we're just going to be right back in the same bullshit story we were last year. So I do like the way that they've held it. Is it taking a beating down on the market a little bit in the last 12 months? Absolutely, but I think it was required. So I'm actually hoping that it doesn't spike too much, because we're just going to get back. We're just going to have another hold policy, right?
Beauty. Love it. Anybody else have any questions about that before Mel dives into her what she's going to be sharing? Cool. Awesome, Mel. Hey, if you don't mind, take it away. We appreciate you jumping on here, contributing right away, right into the gate. So please share with us so we can take this information back to our clients and obviously provide more value to them. So thank you so much for jumping on today.
My pleasure. Thanks for having me so quickly. So I've been at EXP for 3 weeks, loving it so far. It's an amazing group. Thank you for being so welcoming. So I have been doing duplex conversions since 2017. I have helped many clients do it for themselves as well. Going through the process myself really helped me educate my clients, but you don't actually need to do it yourself to help clients do it. And you can lean on other people to do so. About 50% of my business is investors, and that all started when I started investing myself in 2012. A little bit about my journey. I bought my own house in 2012 and 2013. I bought I refinanced it because the prices went up, and I bought a semi-detached home. I've since used that semi-detached home to buy many homes, and I've sold some things in my portfolio to make sure that I am on the track of what I do. Now, the only thing I own right now, aside from my own house and one Airbnb cottage that I have, is all duplexes.
Okay.
So we've
Cool.
decided that that's what works for us. That's what we're good at. So that's what we keep doing. Now we are pivoting a little bit, which I will talk about after. It's not actually in my presentation because it's something fairly new. But what I'll do is I'll go through my presentation fairly quickly because I'd love to have some time for dialogue at the end because that's
Cool.
where I find we actually learn the most.
Perfect. Yeah, just make sure. I'm sure you're about to do it, but just make sure you share your screen. Thank you.
Oh, there we
Awesome.
go. All right. So, why isn't this not working?
We can see it. We can see your screen.
Oh, you can.
Yeah.
It's not flipping for me. Hold on one second.
Sure.
This is where I go wrong with technology. It was working. We just tried it a second
It's all
ago.
good. The window. Cool. Is it working?
No, no, definitely is not.
Hmm.
Okay.
What does it look like? It's okay. What does it look like on everyone else's end? Like I see it.
Just don't go.
I'm gonna exit full
Yeah, don't
screen.
go full screen. I had this problem before. Just don't go.
Oh,
full
you
screen.
have. Okay.
Yeah.
So we'll just
Cool.
do it this way. Everyone can see okay then?
Absolutely.
All right, perfect. Um, so let me just move this up here. So there are who should own an investment property? Really, any of our clients who already own a home should be thinking about investment properties because they can leverage their own home. Now, it's not for everybody, as some people do not want to be landlords, but there are many types of investors out there. So, anyone who wants to diversify their wealth portfolio, owning homes, in my opinion, is the best option. We are in the business of owning homes, so it's something that we know. And it also helps with our business when we are valid and can actually talk about the investments that we own. All right, so we're still not working here. I'll just click it over here. So there's a few investment opportunities. So if you have a son or daughter going to university, I have that right now. You can purchase a home where they can live in it instead of renting. Future empty nesters, you can purchase the home that you want in the future. So you could be in a 2-story family home. You can purchase a bungalow that you want to move into in the future, but rent it out now. So anyone who's currently renting and has enough income to service a mortgage, you could buy a duplex. And this is what we just helped my 21-year-old daughter do. She is already a homeowner. She lives in one unit, rents out her other room in her unit and rents out the basement. So she is currently living with no mortgage, no rent, and she's already owning a home. I think this is where a lot of young people are going to be able to get into the owning a home. Of course, we had to help her. She's 21. They would not give her a mortgage without us being on title, but we are 1% owners, and she saved and was able. Also, the beautiful thing is she was able to only put 5% down because she's actually living there. So it was a great way where she saved money. She's a homeowner, but not paying monthly expenses or very little, a couple $100s a month. And then anyone who wishes to enhance their personal wealth portfolio, so they have money and they want to buy another one, buy more properties. Second-time buyers, this is where we have a really unique opportunity. Some of my best clients came from second-time buyers. When my buyers wanted to buy a second home, bigger for their family, and instead of selling it, I talked to them about renting it out. So yes, I've talked myself out of a few listings. They ended up being the most beneficial clients I've ever had because two of them have purchased more than 7 properties, 7 and 8 properties each. And I was able, by helping them to keep their first home as a rental, build their portfolio that way. Sometimes we have to not think about the deal that's ahead of us and think about what the future potential of that client could be. And then finally, you can help out a family member. You can purchase a home for a family member to rent. So there's many styles of investment properties. So you can get a regular freehold rented out, get a condominium. Those are the most turnkey. You don't have to really do anything. There's no property maintenance, nothing. So you basically just hand over the keys and the person rents. Multi-unit properties. So this is where I find you get the most value. So the reason we choose duplex conversions is multifamily, you cash flow, but the price of the home doesn't go up that much. It only goes up with rent. Or single family homes, you tend to not have as much cash flow, but you're going up with the market. Well, taking a single family home, turning it into a multi-unit, letting it go up that way, and being able to cash flow, you get the best of all worlds. And then just really quickly, there's student housing, mixed use properties where it's retail and commercial as well as residential and vacation properties. But we're not talking about those today. So typical types of duplexes, you can buy the purpose-built duplex where it is 2 units already and you just rent it out. You have no ability to increase the price at that point unless you increase rents. And then there's the duplex conversion. So that's what I'm going to talk about today. So the first thing you need to do when you've decided to take on a duplex conversion is to actually build a team of professionals and resources. This is the biggest thing. And this was our biggest challenge the first time around because we did not have everyone in place. We had people not showing up to our job site. It was, we were self-managing it still back at that point. And that's where we have now a team. So we have an insurance company who we know now, they know what we do with the duplex conversions. It's very easy to plug and play, but finding that was difficult. Mortgage specialists, you have to have a mortgage specialist who can be creative. Oftentimes, while we're doing the duplex conversion, we borrow private money, even at a higher price, so that we can, as soon as it's done and it's worth a whole lot more, we can actually put it into a conventional mortgage. But it ends up costing us less without having to pay those buyouts if we were in a conventional mortgage from the beginning. I have a chart at the end of our first duplex and how we did it all. So I will go into that a little bit more. But you want to make sure you have all your handyman, that you have a paralegal in case there's tenant issues, that you have property managers, that you have even an engineer, because a lot of times you have to do certain engineer drawings. But most important, you need a good realtor and a good mortgage advisor. So this is where you come in when you're working with people who want to duplex convert. So the first thing is to get a mortgage, then find your good realtor, which would be all of you. Then you have to find the property that you're looking for. lawyer, and then make sure you get the maintenance. So here is my 7-step process. Okay, so I found the property and I purchased the right property. So the things that I look for are 2 separate entrances. That's the biggest one. Putting in an entrance where one doesn't exist costs some money. It's not that it's impossible, but I'd rather put my money to other things. There's enough properties out there with 2 separate entrances that I don't have to go make my own. Style of home is really big. My first choice is always a bungalow. They're the easiest to convert. Raised bungalows work okay as well, but oftentimes there's a garage in the way. So the basement is less square footage, so you don't have as big of a unit. Side splits and back splits work often if they're a walkout. That's when they work really well. But again, my preference is a bungalow. Ceiling height is huge. In Kitchener, it's 6'3". In Cambridge, it's 6'5". As much as most of the municipalities are very similar with duplex conversions, go online to the city that you're in and you can pull it right offline. I actually send it to my clients at the beginning when they are looking. Then we have what are minimum things we need are. So the ceiling height is really huge. And then the other thing is large basement windows. They can be added if needed. You can see a picture there. This is one that I did, the small basement window, and we put in a window well with a big egress window there. So they can be added, but having the window there to start off with definitely helps the process. So the duplex design. So I am lucky enough to be married to an engineer. So he does the design for me, but for us, I should say. But it's something that I would highly recommend having it done and not doing it yourself. Doing it with someone who knows, who can set out different things. So then when you do go to the city for the permit, it becomes much easier if everything is done correctly. So you need minimum window spaces for room areas. So there's those natural light requirements. The other big thing is fire safety requirements and egress. Those are the things that they're going to be the most sticky on. I have put in one of our drawings right here, so you can see it becomes quite complicated and has a lot of different things on it, and that's why I wouldn't recommend doing it yourself. So City of Kitchener has a 10-day turnaround, and it's usually 2 to 3 weeks to receive your building permit, which is the best out of all the cities. Cambridge will hold it up for months. So that's something to keep in mind. Cambridge is a really good city to do duplex conversions, but it's a good thing to let your clients know. So you want to make sure you get your contacts, which I mentioned before. You want to have your general contractor. This is going to be your most important person out of all the people that you get. We did one with a general contractor that we won't work with anymore because it really, I became the general contractor essentially. So this is the person that if you don't have a good one who is making your inspectors from the city upset because he's not talking to them very nicely and all that stuff, it becomes a bit of a disaster. So my biggest recommendation is make sure you have a general contractor who's done it before, who knows what they're doing, and who can keep your project on track. A little bit here about project management. I'm going to whip through this, but they are going to be your person who's typically your general contractor. On a small job like this, I wouldn't hire an additional project manager. So they're going to coordinate everyone, the trades, making sure that they're going to come in at the right times and that they're not holding up your project essentially. Because if they're ready for plumbing and the contractor hasn't set up the plumber, your home could sit empty for days. My recommendation as a first time doing a project like this is you should be in there daily, but at a minimum weekly, to see the progress and what's going on. If you don't keep eyes on your project, then anything can happen. You're not there, you don't know. And it's also good for them to know that you could stop by at any time. And then lastly, you're going to want to put someone in the home. And so you want to have lease terms that make sense. You want to set out where the parking spaces are. I recommend adding a parking space if it's not already double wide, because you do not want tandem where your tenants have to talk to switch cars. That will become a nightmare. You want to put who is mowing the lawn and shoveling, what utilities are included or excluded, or if they're shared, and then who uses the backyard and garage. You want to make sure those are completely set out by your tenants so that you have no arguments. There's nothing worse than having a duplex where the tenants do not get along. When choosing tenants, you want to call references, check your credit score, and make sure you get a current letter of employment. All right, awesome. So I have included my very first duplex that we did. We did it in 2007. We purchased it for $402,000, if you can believe it. So you can't purchase for that price anymore, but it still works. But I wanted to show one over time and how much money you can make over time. So our down payment was around $80,000. Our reno cost was $82,000. So our initial investment in this property was $162,000. As soon as we were done the property, we had put that into a private mortgage, and we refinanced into conventional 6 months later at 575. So our new mortgage was, when you took the 20%, was $460,000. So we received a check for $115,000. So above, you saw our initial investment was $162. We got a check for $115. So our current investment after 6 months of owning that home was only $47,000. That's all we had of our own money into that property. Then sorry, it cut off on the side, but in 2021, we refinanced this property. The new value was $800,000. So with 20% in, our new mortgage amount was $640,000. At that time when we refinanced, our mortgage only had $415,000 left on it because the tenants had paid it down. And our refinance amount we received a check for $225,000. So when we took away the $47,000 that we still had in the property, our profit on this property as it stands right now, because I have not refinanced it since 2021, is $178,000. So this mortgage does come due next year in at the beginning of 2026. And we will likely refinance again, even though the value of this unit is only about $950. But when the mortgage comes open anyways, I do tend to refinance. Does anyone have any questions here? Because a lot of times there are some at this page.
What I'm seeing is just, lots of leverage here, which is good, but like fairly risk-free leverage. Does that make sense?
Yeah. It's nice that it cash flows as well. We try and keep the cash flow as low as possible. But the beauty of refinancing and keeping the mortgage high so that it doesn't cash flow too much is that 178,000 we have now is tax-free money.
Wow.
I think that's one thing that most people don't realize. Like they're always looking for cash flow properties. Where I'm like you, Mel, where I don't want any additional income. So I'll always kind of figure out or what can the market bear as far as rental. And a lot of time you can only do 80% loan to value anyway, but get it to the point where you're not really cash flowing all that much, or if you are, it's only really a small amount to have, a buffer, if you will. And to your point, you're taking out as much as you can tax free.
Exactly. So even though come 2026, it could be the value could be higher than 950 at that point. We increase rents every year on the year, whatever the value is. Another great thing about a duplex, if you have duplexed it after 2018, the basement unit is an additional unit that didn't exist before. So it is not, the basements are not rent controlled.
Really? Okay. I did not know that.
The upper unit was an existing unit from when it was built. So
Right.
the upper unit it is rent controlled, but the
Yep.
basement is the unit that never existed. So it falls under the non-rent control.
It's good to know.
Yeah. I mean, I tend to not put the rent up significantly if it is not if it's someone I have a good relationship with, but there are a few people that you want to kick out, and that works really well for the kick out because if they're not great tenants and they don't pay well, but they're professional tenants that just pay enough to keep it going, you are legally allowed to put it up, and usually they can't afford that. But again, I don't do it very often, just because I want to keep good tenants.
Yeah, of course.
So the figures. So if we think about it, how much would it cost you monthly to own an investment property, totally clear of debt, valued at approximately 925 in 25 years time? It's nothing. It will pay you. If you do it this way, your tenants are paying down your costs. I've just showed you how to pull out all your money in the end. It still works under the new prices. It just takes a tiny bit longer. I was able to do that in 4 years. I figure it takes about 10 right now. But what investment out there? I don't know anyone who's going to pay my RRSPs. I don't know anyone who's going to pay for me to play the stock market. It doesn't exist. This is the only investment that you don't actually have to make your monthly payments in the investment. I mean, occasionally I have tenants switch over and I have to pay for a month, or I have someone who hasn't paid and I have to pay it. There's still no investment where you're not required to pay that monthly payment or the initial payment in. If you guys know of one, let me know. But
Yeah, I'm kidding.
as far as I know, property is the only one at this point. So the ROI, I talk about this a lot with people because your return on investment, if I go back to this page, people think my original investment was 402, but that was not actually my investment. That was the purchase price and the mortgage amount. My initial investment was actually only 162,000. So if my ROI on this property, my return on investment is crazy. I've more than doubled it because I have 178,000 above what I've put in. So that's a really good thing to keep in mind. So here's a little before and after photos. So this is the most recent duplex the one I did 2 times ago. It's one that I put more money in than any of the others. And in reality, I thought it did get me more rents, but it evened out in the end to the return on investment. So I wouldn't necessarily take on such a big undertaking again. So here's the basement. It already had a little kitchen in it, and we improved the kitchen. Fun fact about doing a basement, the only room that doesn't need a window is the kitchen. So that is the first in my designs of a basement. That is the first thing I look at. What room does not have a window? Because they do not require a window in a kitchen.
More cabinet space too. That's good.
Yes. So that's the first thing I choose. There's a before and after picture there. I keep things very neutral. I've changed the bathroom there, put in a double sink because we had the room. Double sinks are amazing. People love them. This was the original basement kitchen, and I moved it because it had a great big window, so it became a bathroom. So don't be scared to move things. This is the upstairs. As you can see, the house was incredibly ugly, so I picked the ugliest houses I can. Another double bathroom there, double sink. That's the main floor. It had a big wall we took out. In these units, I am currently getting 2,700 for the upper unit and 2,550 for the lower unit. It's a 3-bedroom up, 3-bedroom down unit. It actually still cash flows too much. So I need to continue to refinance these properties to reduce the cash flow because rents have gone up so much. So this is a presentation I did. I actually do it for clients, and which is why I have the choose a great realtor in there. So I invite you guys I'm happy to share it if you ever want to do a presentation with your clients or even an investment seminar about it. But one added thing that we are now looking into that was never part of our plan before is adding ADUs to the property. So the tiny home essentially. So I don't know if everyone knows this, but just recently, Kitchener only has approved duplex ADUs. So 2 of my properties work perfectly, and what we're going to do is take the duplex and add another duplex on the back, a tiny home duplex. What that's going to do for us is allow us to have 4-unit properties. It's going to increase our value by a lot, by about 350,000.
What is one of those duplex tiny homes going to approximately cost to build?
Between 350 and 400.
Okay. So that's a significant amount, obviously.
It is.
Can those be separately financed, or how does that work?
Yeah, so essentially what I'm going to do is get private money to do it. I always have a very large line of credit that I have that is on my house that barely has a mortgage. So we have a huge line of credit on that. And that's what I use to play with doing the upgrades, doing all of that stuff so that I always have the money. And then as soon as I put it into a conventional mortgage, then I pay that line of credit down immediately and keep the rest of the money.
Now,
So
this might be something offline, but let's chat about ADUs because I was recently introduced to a company, local company that's actually doing their actual stackable EDUs that
yes.
allow their prefab stackables, and then you can do duplexes for about $1.75 a square.
Really?
Yeah.
All right. I'll talk to you about it.
I know. So yeah, let's take that offline. But I thought that might be something of interest to you because I also
I have not chosen at this point. I've had two quotes on them.
Yeah, cool. It just I had a meeting last week with it. And it was really impressive. So yeah, let's chat about that offline.
I figure the top unit can get about 2,000 and the basement, because they'll both be 2 bedrooms. The basement will get about 1,700. And if it costs about 370 at the top, you're still in the 1% rule. So any of you who don't know what the 1% rule is, if you can rent out for 1% of your purchase price, that is a crazy good investment. That is like gold. So if I'm going to spend 350 to put this unit on and get around 3,700 a month in the unit, I'm laughing at the amount. And right now you cannot buy a property for 370. So if I can add 2 units to a property for 370, that's huge. If Micah can find a cheaper one for me, even better. And I mean, that's why we do this, right? That's
the number one thing that kind of comes to mind as soon as you add more units would just be the parking, probably.
Yes.
Or maybe get a little tricky in some cases.
Yes, so you have to have parking. It is allowed to be tandem, but you need it. So what we do is take away part of the backyard space from what it becomes basically a laneway. Your driveway becomes a laneway and parking is in the back, and then there's the ADU.
Oh, okay.
Yes.
Very cool.
So that is something we're looking into strongly because purchasing right now, you're looking at 700 to purchase a bungalow, and then you're putting in the 100,000 in for it to be worth about 950. Still works great, but it's a lot more cash out with not as much cash in.
Mel, one thing for like lot sizes, like I haven't reviewed that totally yet, but I imagine that they have to be they have to be the 50 to 60 feet minimum in order to get that laneway back, in order to have parking and access to that ADU, right?
Because you also need a dedicated walkway for like emergency services if needed. Right. So you do need a wide lot. Yeah. I think 50, it works really well with a 50 and above. I think you can do slightly smaller depending on the size of the home that's already existing on the lot.
Right.
I do know someone who took down a garage. So right now we have a pretty rickety garage on one of ours, and that would be coming down to allow the access to the backyard.
Okay.
Yeah. So the old bungalows, which is what I'm looking at every time I purchase anyways, is these old bungalows, and their lot sizes generally work. Now, 2 of mine that I have, based on where the garage is, does not allow full access to the back, and I actually cannot do it on there. The bungalow without the garage, with the garage that's separate from the house, like set back, those actually work the best. All right. So any questions at all?
I have a quick question.
I don't have any. Does anybody have something?
Yeah, I have a quick question. Can you hear me?
Yeah.
Yes.
Yeah. I heard you mention a couple of times that you don't want properties that cash flow or not cash flow too much. Is that just because of tax implications, basically? You want to not be taxed basically on that? Yeah.
Yeah. We get taxed enough as realtors. So
absolutely. Yeah.
And if we can reduce that, because it's essentially taxable income when you cash flow on a property. So exactly. It gets added to your income. Mm-hmm. So I would rather have high mortgages that don't cash flow and I can pull out tax-free money than have properties that are cash flowing $600 each and it's adding to my income.
Yeah, I love that little nugget about when you refinance, that's tax-free money. Good to know, good way to phrase it as well too. And I think it's I love these masterminds, guys. And I think moving forward, I think another one would be good, like the tax implications of being a landlord, because I think a lot of people don't know like the write-offs you can have, you know, how to really game it so you're really benefiting and obviously reducing your tax burden legally and in a good way as well too. Because I think a lot of people really don't know that. That might be a good topic for a future mastermind as well too.
100%.
I literally write off everything, Fabio. Everything.
Yeah, and that's what I'm yeah.
If I have to buy soil to top up one of the properties, I
Yeah.
mean, I used to do all that stuff myself. I have a landscaper now. But to start off, we pulled up our sleeves. We did so much of this to get into the game because we didn't have a lot of money. And now in these years where real estate isn't so great, these properties are actually making the bulk of our money.
Love
And
it.
the bulk of our net worth comes from a lot of these properties we're doing. But like everything, soil, plants, like the little things,
Yeah.
salt
Cleaning
put into the
supplies.
sweeteners, like everything gets
Yeah.
written off.
Awesome. Good to know.
That's a good idea. Thanks, Fabio. Love it, man. Anybody else have any questions for Mel before we jump off today, or maybe even anything real estate related that's come up in your business over the last few weeks? You're here to have. Thank you. It was awesome. I think there's a lot of people that want to get into this investment side of the business, especially as realtors, because we're kind of in the day to day with it. So that was extremely helpful from the aspect of like visually seeing kind of what you've been doing with some of your projects, seeing some of the numbers involved in it, the refinancing process, understanding some tax implications behind it. So that is a good idea for another mastermind. So we'll definitely consider that for the future for sure. That's great. Makes me want to go buy a duplex or a bungalow and convert it at least. That's for
Well, if you
sure.
have any questions, let me know. I'm
Yeah.
always here to help. So if there's a property anyone wants me to look at, I would love to do it for you. I have done it many times. Ultimately, we can continue to sell homes and make this large amount of money. But if we don't get into what we're doing, like what's our retirement plan? You know what I
Right.
mean? Like these properties and being at EXP and having rev share, like we have the ability to have a really good retirement plan. We don't want to be the 78-year-old realtor still selling homes. So
I
get
definitely
out
don't want
there, do something. Don't just sell homes. You have the ability to create huge net worth, and it will also help you in your business to be valid, to show that you
Right.
are also an investor.
Awesome. Love it. Well, thanks, Mel. Thanks for jumping on.
My
We'll see everybody in a few weeks. We'll get the next one out a little bit earlier, so you have some time to plan your week. And I appreciate everybody giving us your time today. Go crush the week and let us know how we can support your business. We'll see you.
Thanks so much.